Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York on Thursday, May 8th, 2014, and this is the daily report for gold and silver. After a dramatic sell-off in the marketplace yesterday, we have gold in essence unchanged today, currently trading $12.88.89. Puts it off roughly $1 on the day. Now the low is 84.60, the high is 96.70. We'll touch upon the low and the high in just a moment. Now we do have platinum and palladium trading higher today. Silver, although, is down about 14 cents, the low 19.02, the high 19.47, current 19.34. More on silver at the end of the show. As I said, we're currently trading roughly at $12.88, $12.89. I did recommend trailing your stop up to below 87. The low, call it 85, 84.60. I spoke with many of my subscribers through email this morning to see where they had placed their stops. Most of them are still in the market, so I'm not exactly how I should play this here. We'll play it as though we got stopped out, but I'll tell you this. When we take a look at this marketplace, one thing we can see is over the short term, we've got this low here. Secondary low is a higher low. And the third low that we've had, this is our most recent low, has been a higher low. When we look at our highs, we have two of them, high, and then we get a higher high. So we've had a series of higher lows, we've had a series of higher highs, and it does appear as though we're finding really good support at around, we first saw it at around 77, and now I believe we're seeing this support come in at around 88. Now, this market is being driven upon geopolitical uncertainty. And as I spoke about, as that changes, as the perception changes, as new news comes out, you get this really increased volatility in the market, exactly like we saw yesterday. It was sold off not only because of Yellen's statement about keeping interest rates low and that the economy was improving, but it was also reacting to the fact that Putin said he had pulled his troops back. Now, according to the news that I saw yesterday and this morning, there's no evidence of that. So I certainly don't think that the conflict between Russia and the Ukraine has been resolved and put to sleep. I think personally that we could see that flare up at any moment. And for that reason, I believe the long side is where we want to be in gold. We want to be sidelined or absent in silver. I don't really see that as having the same kind of potential. But when we look at this market, we have been all over the board this week. There's no doubt about it. And we absolutely don't have a defined clear-cut trend. That's the other thing that we're noticing. When we look at this chart, even on a short-term chart, and you'll see it on a daily even more, and we've been commenting on this all week, we're ranging from a high. You've got 28 as the high here, I believe 1301, 1302, and then about 1310 here. These have been these highs. These lows have come in different places. It's just these last three lows, as you can see, are forming an upward slope. That's the first thing. The second thing is when we look at the marketplace with these series of lows, and this is what's really important to me, is that I'm basing it upon this low here, and this low here. We absolutely had a breakout here. There's no doubt, first of all. Second of all, look at where our current position is in the marketplace. It is, in fact, above this resistance. So a move below this resistance says that we could go back into a bearish mode, but as long as it's trading above this and it begins to channel up and along this line right in here, I believe that we've still got an effective play on the long side. And so for those that did get stopped out, you got stopped out at 86, 87. The market's trading at 89, roughly $3. I advise going back into the market personally. I would really place our stops a little bit tighter, though, this time. You just want to place them below 1277, and that's in case you did place your stop tight and you got stopped out, because in essence we got in this market at 92, market's trading at 89. It is roughly in the same area as to where we entered. Now, when we look at our daily chart, I'm going to convert it in a second back into a straight candlestick. This is Japanese average, of course. First thing that's apparent, and I'm trying to look at the real bodies. You've got the real body down here. In here, you've got the real bodies having a slightly higher low in the market. And the other thing that we're noticing, just as we noticed on our short-term charts, is we have this alternating candle color pattern. In the Japanese average, you'll see it in the standard candlesticks in just a second, but we have this alternating pattern. We are range bound in this market. There's no doubt about it. Now, I have converted this back into our standard candlestick chart. It's a little bit clearer, but we're still getting a range bound alternating candle color, and I'm talking about this area right in here. The market comes down from about, what, 1320 and change, 1330 and change right in here, 1333, excuse me. When the market came down, we're absolutely finding support in the market in the area of around 77 to 80. There's no doubt about that. The candlestick that we're forming on today's market is a doji. That doji is a consolidating candle. Once again, it can indicate pivot points. It can also indicate a market at rest. My sense is that we will maintain this market in terms of its tight range until new news develops out of the Ukraine, because I do believe that a lot of what we're seeing is premium going into the market as well as out of the market, depending on news stories that hit and events that hit. And because of that, you're going to get these wild swings. However, even within these swings, we have not seen the market break below or above this particular range. Now, this is a 2-day chart, so the most current candle, of course, is still going to hold this lower market that we saw yesterday. It's right in the middle of our range on these cascading channels. We're not getting any kind of real information that's relevant in terms of useful trading information. We are still above this 23% cascading channel line. We are still below the 0% channel line. We could see it come back and test this 23. At some point, though, if we're going to get really bullish on the market, we have to see this particular price range break through this cascading channel line. Without that happening, we're really not getting the technical evidence I would like to get that's telling us we're moving back into a bull market. We could still be looking at counter trends in a bear market, and there's nothing really conclusive in terms of technical evidence that tells us otherwise. We have had spurts in the market, but the question is, those bullish rallies, were they simply counter trends in an existing bear market, or are we witnessing the beginning of a bull market? That is still something that, in terms of technical evidence, has not been decided or determined. However, when we actually do stand back in the market and take a look at our most recent channel down, we have had these rallies. This is last year's rally here, $200. This is this year's rally here, $200. However, when we take a look at this market, let's go ahead and just blow that up just a little bit. We hit this top. This is that market coming to about 1390. Now the market's coming back down, but you can see it's trading sideways here, and that's something that we really haven't seen in a long while. Now, the last time we really saw the market trade sideways, if we look historically, was as it compressed right in this area right here, right before a dramatic, that last spike to $18. You can see this is that sideways trading activity here. But here we pretty much have a straight channel down, up, down, up. And here, for the first time in a while, we're actually getting this sideways action, and that's something that has been unusual. We've seen it before, but typically when we see this kind of activity, it tends to come before a dramatic move. And so the question is, will that occur again? My sense is that we can't tell the future. We don't know what's going to happen, but what I do believe to be evident in the market is that if the conflict in Russia and Ukraine escalates, I believe we could see this market spike substantially higher. Traders, silver is another thing altogether. My sense is the one thing that we talked about time and time again is that silver has really never broken out of any part of its downtrend when we saw gold break out. We saw gold break above a long-standing resistance line. We've seen it most recently break above a short-standing resistance line. Silver has not done that. In fact, what we have seen in silver, when we look at this, a weekly chart, Japanese average format, although it appears as though these candle sizes are getting much smaller and we could be forming a base at this particular point, and the point that I'm looking at is roughly at $19 per ounce, we've had no conclusive evidence that this market wants to break to the upside and begin to move higher. If anything, it has been slowly meandering to the low end of the spectrum. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the weekly wrap-up on Friday. Bye-bye.